next guest says that the S&P 500 may have exceeded his expectations, but that the gains are a little bit deceptive in his words, and he's not all that impressed. Lee Cooperman recently published his memoir, by the way. It's called From the Bronx to Wall Street, My 50 Years in Finance and Philanthropy. It's a good read. You got to check it out. He is, of course, the chairman and CEO of Omega Family Office, and he joins us right now in an exclusive interview on set to talk about all that's been happening in the markets. Lee, first of all, good morning.
Good morning, and nice to be with you.
It's nice to see you. It's been a while since we've gotten to see you in person.
Yeah, well, you get lazy. When I was not on set, I used to sit on the program with my shorts on and my slippers. Now I got to get dressed like an adult.
Right. But, this is all of us, right? Back to work.
Getting up at 5:15 in the morning to get in here on time. But nice to be with you. Good seeing you.
Good to see you, too.
I do watch the program when I'm not on.
We appreciate
You guys do a very
that,
good job.
Thank you.
God bless you.
Lee, we mentioned a couple of your comments. It has been a pretty phenomenal market. I think the S&P is up by about 16.3% for the year.
Well, it's very deceptive, the S&P, because, 7 companies account for 73% of the gain. If you look at the other 27%, the other companies in the S&P 500, they're up 3 or 4%, which kind of fits what I think is going on. I think simply with all the issues out there, the S&P is trading at 19 or 20 times earnings. And I think that's just too high. The equity risk premium is very low, and I'm one of the few people who don't think interest rates are all that high. Now, it's maybe because of my age and how long I've been around, but prior to 2008, the great financial crisis, the 10-year government bond yielded in line with nominal GDP. And so if you have real growth of something around 1.5%, 1.75%, you have inflation bottoming out at 3 or 4%, it wouldn't be surprising to me if the 10-year got to 5.5%. It's currently around 4%. That's a minority view. I don't think interest rates are too high. What's the sign that interest rates are too high? The stock market's been going up. The market has a very speculative tone to it. There's no indication. In Georgia, their flash estimate in GDP was like 5%. There's no indication that the Fed is restrictive.
And that means what for the broader economy?
Well, basically, ultimately, I think we're going to wind up with a recession, but it's not here. It's not now. I think the recession will be caused by either QT or the Fed or the price of oil or the dollar. And right now, everything is reasonably well behaved. So, the market's up a lot this year, I think in part because of positioning. The sentiment coming into this year, I think, generally speaking, was negative. I respect his work, but Mike Wilson of Morgan Stanley, and I respect his work greatly, he had a consensus view, which was we have a very difficult first half, followed by a better second half. And I think the market has a way of being very perverse. I think it's going to be the reverse. But I think the strength of the market was very much tied to positioning. People were just very negative, and they're just caught up now with the market. Secondly, the price of oil declined, which was a positive for the economy, and the strong dollar reversed, which helped the economy as well.
So you think the major averages are coming down in the second half?
Yeah, I think so, yeah. I wouldn't be surprised if... I wouldn't make this a definitive comment, but I wouldn't be surprised if we've seen the high for the year already. I don't think my big issue, my big view is, and I've said this about a year ago in the program, I have a view very much like the Pharaoh had a dream, and his dream was interpreted by Joseph. It was in the Bible, and his dream was we're going to have 7 lean years following the 7 fat years. I don't expect we see a new high in the market for a long time. We've had very bad policy mix. And part of the strength this year has been very, stimulative fiscal policy, restrictive monetary policy.
And what do you do about all this?
I'm a stock picker. I expect, I'm short the S&P above a certain level through options, and I'm picking stocks that I like. My criteria mainly is if we think the stock is cheap, they either got to pay me to wait, because I think I have to be patient in the market. And at 80 years of age, it's hard to be patient, right? But I got to be patient. And that if stock is cheap, that they have the financial capacity to buy back stock. So there's 2 criteria I look at, the ability to repurchase stock, and it has to be cheap. So it's a very strange environment. I see NVIDIA, and I missed that. I don't own it. NVIDIA announced a $25 billion repurchase program. Don't they know that stocks have memories? The stock was $150 this year. It's now knocking on the door of $500. Stock has tripled, more than tripled, and they've been doing $25 billion buyback. So, you could say it's either they're very bullish in their business, which I'm sure they are, or they're just unrealistic. I mean, myself, I would rather see them pay a dividend rather than buy back stock at 40 some odd times earnings.